This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-presented by Canara Bank. Together we can.
Good morning and welcome. You're watching the Business Today show with market opening just around the corner. We're here to get you all the opening action on D Street. Let's take a look at what's making headlines in the corporate and financial world this morning. Shares of tech and business development companies stumble in the US after AI major Anthropic launches new legal tools for its Claude chatbot, sends jitters through Wall Street as investors fear its ability to disrupt high-margin legal research and advisory services. US President Donald Trump still has not signed the executive order to lower tariffs on India. External Affairs Minister S. Jaishankar, meanwhile, meets his counterpart Marco Rubio and Treasury Secretary Scott Bessent in Washington, D.C. Says he had useful discussions on trade and strategic partnership. Government refutes allegations that Indian farmers will lose out in the U.S. trade deal. Commerce Minister Piyush Goyal says interests of sensitive sectors such as agriculture and dairy have been protected with safeguards. USTR Jameson Greer agrees, says talks on agri remain work in progress. FII stormed back to the Lal Street after India-US trade deal, logging biggest buying since October 2025. Net buy of 5,236 crore rupees. DIIs also joined the rally with 1,014 crore rupees net buying as markets surge on deal optimism. Now, the U.S. trade deal sparks foreign inflows. FI is now buying almost 5,236 crore in equity yesterday. That's the biggest buying amount that we've seen since October 28, 2025. FI buying hitting a 67-day high. DII's net buyers of about 1,014 crore in equities on the 3rd of February. Look at that number. Remember, we were waiting to see the impact on FIs renewing their buying sentiment here in India post the budget, of course, but more primarily post the trade deal finally seeing the light of day. At least the announcement coming in, and that is clearly the trend that has kicked off with the trade deal sparking foreign inflows and net buyers of 5,236 crore in equity yesterday, which is the biggest since October 28. That's a 67-day high, a new 67-day high that we're seeing on FI buying. A big assurance from Commerce Minister Piyush Goyal after the landmark India-US trade deal announcement. Goyal has said the agreement is in its final stages with a joint statement to be issued soon and promises it will protect India's sensitive sectors including agriculture and dairy.
140 crore Indians are celebrating a trade deal which is under final stages of detailing between the negotiating teams of both countries. We will be shortly issuing a joint statement by both countries. I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud, that will protect the interest of every Indian and provide huge opportunities for all the people of India and will protect the sensitive sectors, the interests of our agriculture and our dairy sectors.
Now, the first statement coming in from the White House after the Trump social media post on the trade deal. Let's listen in to the U.S. spokesperson, Caroline Levitt.
A very good relationship. India committed to not only no longer purchasing Russian oil, but buying oil from the United States, also perhaps from Venezuela too, which we know will now have a direct benefit on the United States and the American people. And in addition to that, Prime Minister Modi committed to $500 billion of investments into the United States, including for transportation, for energy, and for agricultural products as well. So this is another great trade deal.
A big eco booster from the U.S. trade deal. Chief Economic Advisor lists the upsides, higher exports to boost GDP growth. In fact, the CEA is saying that FY27 GDP growth may rise to 7.4%. The eco survey had pegged FY27 growth at 6.8 to 7.2%. The Chief Economic Advisor saying that we will need to revisit a detailed calculation and see a boost in investor confidence, deal to increase both FDI and FPI inflows. Also saying that it has restored momentum to the China Plus One strategy. So whole list of upsides that the Chief Economic Advisor has articulated in his commentary post that trade deal, saying clearly that he sees a big economic boost from this deal, and also that higher exports will of course boost GDP growth, sees FY27 GDP growth even going up to 7.4%, which is higher than the earlier targets, and looking at perhaps revisiting those detailed calculations as he sees a revival in investor confidence, FDI, FPI flows, and momentum picking up as well. All right, market opening for you. We're just hit the opening bell on your screen, just a marginal downtick. Remember, after that huge run up yesterday, 25,636 on opening today. Nothing to complain about, I think, Shell, because we did see the markets enjoy the momentum and a huge comeback yesterday, all-time highs, FI buying coming back in as well. So how are you reading opening this morning? IT, of course, is looking painful, and that is because of what we saw from Anthropic and those huge jitters overnight on Wall Street with regards to what this will mean for BD and legal stocks. So IT, of course, is a big pain point, and I'm going to actually stay on IT for a moment as we digest that, pull up some of those stocks as well, show you the Wall Street action as well overnight, just to refresh your memory. That is where the pain is this morning. Shell?
Yeah, Abha, what's looking good is metals. 1.2% higher on the metals index. 13 out of 15 stocks are in the green, and of course you have strength which is coming in the energy space, the auto space.
I'm going to come back to you in just a moment. I'm just going to come back to you in just a moment. I'm just going to focus on IT because the cuts are very deep. So I think let's just get a very real kind of outlook on this. Sharad, let me bring you in on this. This is post, of course, the jitters last night on Wall Street with Anthropic coming out with that AI tool. It's completely spooked the market. Today, everything in the IT index is down 5% at least. That's clearly where the pressure on the index is coming from as well. Nifty IT is down 5.5–6% this morning.
Yeah, I think the pain has been across the board. Even in US overnight, we saw a lot of correction. Sorry, a lot of correction yesterday. But I think within IT, the type of disruption we are expecting to see with AI, you can expect these things to happen in some pockets or the other. But I think particularly for domestic Indian IT companies, the transformation has happened over the last, 18 to 24 months, where they're focusing on high margin, complicated business, not typically running sweatshops. So unless or until you are looking at companies which are typically dependent, on legal documentation being punched into systems, etc., I think they will be a bit affected by this. But I think the whole pack, the kind of reaction that we're seeing, I think it's a bit overrated, and I think one should use this opportunity to create positions.
Great. So look at this opportunity to create positions. So I want to just dive a little deeper on that, Sharad, because IT already underperformed. We did see a decent set of earnings and selectively decent guidance also as companies have re-strategized and sort of tried to include an AI strategy very visibly in their commentary as well going forward. When you say use the opportunity to build positions, which are the key stocks that you would be looking at?
So I think within the large cap space, TCS, Infosys to make the cut, I think these are very decent stories. If you are wanting to bet on long-term data center centric stories, I think Wipro offers the best margin of safety in the data center story alignment. Yeah. And within the small cap, mid cap stories, I think we are very bullish on Cyient. The next 6 months should be good. The budget announcements have been good. So I think these are the 4-5 stocks we would like to base our investment around.
Great. All right. Thanks for that, Sharad. I also want to mark HAL. AMCA has come out with a fighter jet program. Tata, L&T, Bharat Forge are in that fighter jet race, while HAL has been left out. So HAL is down about 6% today, almost 5.5% right now, but clearly seeing a knockoff effect on the back of those that are in the race for that program and having been left out of it. Sharad, a quick call on HAL.
In the same view, I think such deal wins and deal losses will keep happening in the space. But HAL is our top bet, and I think this is a setback that some of the private players got ahead of them. Though HAL does have a progress, but I think 30-32 times 1 year forward, this is a decent bet. I think a lot of export opportunities and technological tie-ups will be seen over the next 1.5 years. So they should provide a lot of upside to the stock.
All right, let's also take a look at all the export-oriented stocks and see where we're at after all of that furor around the trade deal yesterday and the massive run-up that we saw. Let's pull up a whole host of them. Okay, this is where the cheer continues on the screen. It is, of course, in the broader markets. Gokuldas exports is up 13%, continuing that traction today. Remember, while the deal may still have to be signed, that announcement, the clarity has led to a huge sigh of relief on D Street. We're seeing gains coming in all around. So those are your seafood stocks as well. So Avanti continues to trend higher. Apex is taking a breather today. We've got textile stocks continuing to see gains. All these exporters, Kitex, Gokuldas, so on, Indocount, for instance, all of them are seeing gains. And in fact, Kitex and Gokuldas are still up in double digits as well. So looking very good on the screens there. Let's continue to bring up a whole host of the other exporters as well and continue to show you where the bright spots are in the broader markets. Shell, from the export basket, take us through what you're seeing on your screens as well, because the momentum is clearly continuing here.
Well, Aabha, I'm looking at Avanti Feeds. This is a shrimp exporter. Main markets are US, a fresh record high. This is a rally after a 20% uptick yesterday. Apart from that, you have a strong move coming into the entire silver ETF space, which is something that is attracting a lot of traders, a lot of investors. Those who missed out are probably getting back in. And of course, you have strength coming into Gokuldas exports. This is something that needs to be looked at. And a couple of chemical players with a US focus. Look at NGL Fine. This is 17% higher at 21.25. You have a strong move which is coming into Camlin Fine, 5% higher, 177. And of course, how can you miss companies like Megasoft, Sunflag, and of course the entire silver pack.
So silver is an interesting story, Sharad. Let me come back to you on this, because there were some concerns that precious metals would lose its shine, once the market turned risk off. But silver continues. So do we see this as a larger structural story? Is there still a huge speculative component? Because we've seen massive volatility when it comes to those prices.
Aabha, you rightly touched upon both the points, that there is speculation, obviously, because the last leg of the movement, particularly the movement we saw last month, actually was much more speculative. And I think if you look at the correction, while it might look very steep, we have just covered what we gained in January. We are still higher than 1st January levels, actually. So it's just 1 month's price movement being eroded. But with silver, I think the industry dynamics are there. There is a demand side pull. But I think at the same time that silver has a habit of, having very volatile movements on both sides, and usually it's very difficult to retain the money. That's something I'm skeptical about. So I think bouts of upside will happen from here. That's what we are expecting. But I think the sustained big move 5-6 times that we were to see, that's over. So don't have abnormal expectations from silver anymore. Gold, maybe if something irrational happens globally then, but otherwise I think it's not the best asset class to be in at this point in time.
All right, let's touch upon oil and gas as well. We've got a report coming in from Kepler saying that they don't see a sharp cut in Russian oil imports. Russian crude oil deals have actually been locked for the next 10 weeks. They've said that a rapid exit will pose hurdles for Indian refiners. Let's pull up some of those stocks in a minute as well. They've said that US crude imports are seen rising to about 10% of intake, and US crude is seen displacing African imports, not Russian. Remember, that's been a key contender tension point between India and the US when it comes to Russian imports. And part of course, this entire trade deal is reassurance that US imports will pick up, and especially from between US Venezuela. Now, crude, we'll touch upon it for a minute. Remember, OPEC also kept production unchanged because they were also uncertain about current geopolitical factors. So with fundamentals remaining a little weak, they didn't want to take any chances. They've kept it unchanged. Oil and gas is up about 1.5% today, and that's possibly also because they're not seeing any immediate cut in those Russian oil imports. A status quo for the moment, possibly. Kapler also saying the crude oil deals are locked for the next 10 weeks. Any rapid exit would pose hurdles for Indian refiners, and they do see US crude imports rising to 10% of intake, displacing African imports. So we'll wait and see how this pans out. But your refiners this morning are seeing gains of 1 to 2%. Share, let me come to you as well on the oil and gas pack and what you're seeing visibly on the charts.
Well, Aabha, at this point of time, there is little or no interest in the market as far as BPCL, HPHCL are concerned. These are the only two stocks that we are looking at. To some extent, ONGC and Oil India, these are the ones that were flickering on trader radar lists before the budget, and now there seems to be a quietening period that's come in. Immediately, there doesn't seem to be an impact.
Okay, Sharad, let me get your view as well. I mean, ONGC today is up 3%. OIL is up 3%. Clearly, some amount of strength and balance on the index also, given what we're seeing on IT, but something like an ONGC is up 3% today. And as we speak, the index is also moving into the green.
Yeah, I think both the oil and gas stocks as well as, typically the exploration stocks and the OMC stocks, I think the valuations are comfortable there. Within the OMCs, we are very bullish on HPCL. We think targets of around 550, 600 are possible there. But yeah, it's a fundamental bet. So maybe momentum suggests that when prices are going down, they might get more support, and how Venezuelan oil replaces Russian oil and how that pans out. But I don't think there will be a lot of pain in the numbers. And once this uncertainty dies down regarding Russian oil, I think there is a probability that OMCs will go up. Oil and ONGC also, I think the valuations are comfortable, though they will have price tantrums along with lower oil prices occasionally. But I think some subsidiary in Venezuela getting dissolved is also positive for them. And largely there are some offshore fields that might come up into new discoveries that could be very positive for both these companies. And at these valuations, I don't think there is much risk. All of these companies are offering you 4, 5, 6% kind of dividend yields also. So I think decent investment bets if you want to look at high margin or safety ideas.
Okay, fantastic. Good to get a perspective on oil and gas this morning. It's clearly trending. Remember, it's not a sector that moves, very often, in terms of like overnight moves, but definitely in focus post the OPEC meet, as well as some conversation, dialogue around Russian imports and the US-India trade deal. So we're heading into a new direction, and we'll keep an eye on the progress on some of these counters as well as we keep an eye on crude prices. Markets have moved into the green. Index is up about 50 odd points now, continuing from its gains of yesterday. Exporters and the broader market are seeing a lot of bright sparks as it continues the cheer and momentum. Nifty Bank also now up 0.3%. It's IT where the pain is this morning, and while Sharad says these kind of jolts maybe we may have to get used to them, the overall long-term positioning does seem intact on IT. But today for sure we're seeing a deep cut when it comes to some of those IT names across the board. The major trigger being Anthropic's new AI tool, causing huge jitters in the tech world and Wall Street overnight as well. That's where we'll leave it this morning. We'll be back with a lot more at 3 p.m. for market closing. Thanks so much.
Presented by
National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Ladies and gentlemen, the Dalal Street is not exactly on fire. It's not flying away, but there is sense and sensibility. So far, you've seen a very strong FII net investment coming in yesterday because of this very sharp uptick in the markets on Tuesday. We are setting the first day of the weekly F&O expiry on the National Stock Exchange. So fresh momentum coming in. FIIs have cut down about 25% of their short positions on the index, and that's the reason why you see a mild uptick continuing today. The Nifty now up about 30 points, and amongst the pullers and draggers on the Nifty are the banking setup. ICICI Bank flying away 1.4% higher, contributing 30 points. The only niggle in the market today are the software companies, and that's because of an overnight development in Wall Street where a very strong artificially intelligence setup was introduced in the legal space, which may reduce workload for many domestic IT companies. Therefore, Infosys is down dramatically, down about 6%. TCS, HCL Tech Mahindra, Wipro are the top 5 gainers on the Nifty IT index. And if you look lower within the F&O space, you have Persistent, which is down 6%, Coforge, which has slipped another 4%, L&T Mindtree. Across the board, you have a sharp sell-off coming in. In fact, Infosys, the top traded counter as of now, at about 648 crores. What's back in action on the green side is silver. Silver Bs of all sorts within the mutual fund space are up between 6 and 4%. Gold Bs are doing pretty well. In fact, the entire metals index in top shape. You have it as the top gainer on the National Stock Exchange. And of course, momentum coming back into National Aluminium, Vedant, Hind Copper, Hind Zinc, all the trader favorites. So that's one part of the market. IT is another, and one particular stock I'd like to mark, which is Hindustan Aeronautics. Heavy selling coming in, 6% lower. Already 500 crores has been trading, and that's because this PSU defense giant has been left out. Yes, it has been left out from the race of developing India's next fighter program. So that's the state of play as far as Hindustan Leo is concerned. But to get a view of the market we are now joined by Mr. Kiran Jani. He is a very well-known technical analyst. Namaste Kiranji, a very warm welcome. How do you see the Nifty at this point of time? Gap up yesterday, sustained buying, and of course a fresh start on the green side today as well.
Very good morning, Shilji, and all the viewers joining with us. So basically, after the budget, we have seen, because of this tariff news and everything, a massive gap up. Definitely, as you mentioned, there is a follow-up buying is there, and first time we have seen that FII started buying. So that is something silver line we can see in this domestic, or I can say the international, between the international chaos. Coming to the technical point of view, 25,700, 25,800 was the resistance. The Nifty has given a breakdown of double top pattern below this level only, and after that we have seen massive corrections on a daily price chart. Now there is a tug of war is going on, 25,700, 800. Yesterday also we have seen market sustained somehow. But if you look at the weekly options data, 25,500 call writers are putting so much efforts to keep the market above. Put writers, I mean to say, and 26,000 call writers are keep pushing market at downside. So there is a tug of war is going. The range is very clear: 25,500 and 26,000.
Yes,
this is the range what we can expect in next for at least 5 to 7 days. Any dip below 25,500 that again creates some pressure into the market. One more thing which we like in current market state, that is a market breadth. let me remind you, on 21st January, when market made a bottom somewhere around 24,900,
Yes.
out of 500 stocks of Nifty 500, only 100 stocks were up above 50 days moving average. And if you look at the budget day, when market created panic overall, out of 500, only 100 stocks were below 50 days moving average, which is showing that across the market, the strength is built up in last 10 days. So that is something very good sign we can see into the Indian market. So any dips towards somewhere around 25,500, 25,300 would be the accumulation zone. We would not like to chase this particular gap up and volatility. We are waiting for the dip, and I believe personally that we will see dip somewhere around 20,500 again, where we can enter again into this market.
Yes. Of course, this is a very, very sensible thought process that Kiranji has put forth. Don't chase the Nifty, wait for the trade to come to you, and it often happens. For those who don't want to do F&O, there is always this scope of looking at Nifty Bs, which are the ETFs for both the Nifty and the Nifty Bank. And of course, if you are very keen, you can also look at an equity diversified process fund. Be that as it may, Kiranji, while you are wanting to stay away from the index, are there any stocks or charts on the long or the short side which are attracting trader interest such as yours?
Yes, definitely. See, stock specific teji or stock specific bullishness is there, and definitely two stocks I would like to highlight over here. Both are different sector. One is everyone's favorite PSU stocks, Coal India. If you look at the Coal India price chart, after a drastic fall from 550 to somewhere around 350, almost 30-40% kind of price corrections. And after that, February 2025 to now, we are in February 2026, a 1 year of consolidation. So 40% price corrections, 1 year of time consolidation. Now stock price is out of that consolidation zone, giving a fresh breakout, trading above all important moving averages. Momentum indicator is also in bullish zone. So everything comes at a same time. Secondly, the commodity prices has risen very much, but the energy commodity prices are not that much given a very good performance. So this year we can see again what have we seen before 2 years. So if there is any sort of rise into the energy prices, I mean coal, natural gas, crude oil, and natural gas already has seen because of some certain other reasons also. But we can see that this commodity prices can go up. So Coal India would be the beneficiary of that. Technically looks very much strong at current market price. Keep a stop loss of 420 or maybe below that. Use as an investment recommendation, not as a trading recommendation. We for next 6 months we are looking price target more than 500 based on the daily price chart. So definitely Coal India looks very much promising at current market price. One more stock from auto which we are liking, that is a Bajaj Auto. Last week also we discussed somewhere around 93, 9400. Today is 9700. Multiple ascending triangle pattern breakout is there. There is a big underperformance in terms of peer comparison. If you look at TVS Motor, if you look at Eicher Motor, if you look at Hero Motor Corp, Bajaj Auto was into the underperformance for last year. This year, at least that performance should come and catch-up rally should come. So for the catch-up rally, one can go long at current market price, or any dips toward 9500 would be the great buy. Keep a strict stop loss below 93, 9200, and at least we can expect 11,000 kind of a target in next 6 months.
Okay, let's look at the broader markets in terms of where traders such as Kiranji are active on the long side. Look at Lloyd's Metals, 12% higher. This is the top gaining counter in terms of gains, plus very heavy volume. So you have 18 lakh shares traded and 4 times the 5-day average. This is where trader interest is concentrated. Exide, after many months of continuous selling, you have Battery Maker up 4.5% at 342. Similar in the auto space, JBM Auto 6.5% higher, 602. That's how the markets are structured on the long side. A fresh high on GE Vernova Transmission and Distribution Company. This is at 3688, 7% higher. Very strong volumes. And of course, you have Pidilite. The management will be joining us shortly for its call on earnings. And of course, selling pressure in the entire IT space. Look at Infosys, already 100%, 70% of 5-day average traded. This is something that let's should be discussed with Kiranji. Kiranji, Infosys is an index heavyweight, 6% lower, below 200-day DMA. Is this something that you are looking at?
So coming to the Nifty IT, after this tariff news, IT gave a very good gap up, but did not sustain, and there is some negative news is also going on. Now, first of all, we should discuss Nifty IT. So after giving the breakout of ascending triangle pattern, today there is a big gap down, and this gap down drag down the index below is 200 is moving average, which is a little bit risky, number one. Number two, if you look at the rising trend line support, again, the index is trading below that. So I think this falling knife, we should wait for at least day or two. Let's settle this dust and then we can go long. Now coming to the Infosys, the moment Nifty IT is trading below 200 days moving average, whereby Nifty is trading just above its 200 and 100 days moving average, which is again a silver line in this chaos. So similarly, if you look at the daily price chart, there was a resistance of 50, 1540 kind of a level for Infosys during the past month. Now that could be act as an support also. So anyone is holding Infosys, keep a stop loss below 1540 or maybe 1550. For fresh buying, I think wait for at least a day or two, or let Infosys to cross 1580. So you can initiate your long once 1580 crossed, or you can wait for 1 or 2 days. And who is holding this particular stock, keep a strict stop loss of 1540.
Okay, fair point. Anything that you are paying attention to in the market that's looking good? A view on maybe silver at this point of time? Silver Bs are the top traded space on the National Stock Exchange as of now. Already 1,000 crores traded and we are at 940.
See, honestly speaking, if you consider silver as an investment at this particular time, I would say stay away, honestly speaking, because after a rally like 2x, 3x on silver or any commodity, because the fundamental of commodity itself saying any commodities demand cannot be rise by 2x, 3x within the year or within a very short time of span, number one. Number two, if any commodities demand is increasing like this way, people start shifting for the substitute. Now silver has a two component, one is as a precious metal, another is an industrial metal. Within the industrial framework, silver is not only one who is able to use in AI, which is the only use in creating data center, I mean to say, it is not an only metals to use in electric vehicle and everything. People will find substitute. So as an investment point of view, this is not a very good price, honestly speaking. So we are advising all our investors at our place, don't buy silver base at current market price. Let's wait. At least $60, $50 is the a theoretical a good value for silver. So let's put aside of theoretical value, we should add 10%, 20% premium. Then even at least for the $70 one should wait. So any dip towards $70, once it already came, we have seen $71 low on silver. So that is a good price. On NRI terms, somewhere around, if we consider a 1 lakh rupee, 1 kg pricing, then 2 lakh to 1 lakh 80,000, it's a fair value, what we believe as per fundamental and as per technical also. Those are the very good price to enter into the silver. So as of now, stay away from the silver.
Okay. A view that you might hold on any of the textile companies, small smart gains coming into Gokul Das Exports, smart gains coming into Vardhaman Textiles, Kitex, any house call on the textile space?
See, textile we like Garware Tech. If you look at the overall, one second. If you look at the overall chart pattern of Garware Technical Fiber, the chart pattern looks very much promising. After the yesterday's news of tariff, Garware crossed this 100 days moving average. There was a big gap up also. Now you look at the overall chart pattern. It started falling from 980, 970 level, made a dip somewhere around 550, and from that a sharp rally. We can see V-shaped recovery is there. Falling wedge pattern breakout, and now stock price is trading above its all important short-term moving averages. So any dips or even at current market price, one can go long. Keep a strict stop loss below 680, and if prices is not breaking down below 680, we can expect at least target price of 800 plus 850 kind of target in next 3 to 4 months.
Okay. A view that I would want on gold as well. How are you looking at this one, Kiranji?
So gold prices, right? Okay.
Gold, yes.
Okay. So coming to the gold, again I would like to highlight, see, gold is not an industrial metal, number one. Gold is a natural hedge against all the financial instrument trading into the world. Now, since Mr. President Trump is there, definitely we should not miss the volatility. Always there is a risk of that. So that is the natural hedge for all the investor and all the trader, and which is helping gold to go up. Otherwise, you look at the inflation. Inflation is not that going ahead of curve, which can help gold to rise. There is only uncertainty which helping a gold. So again, as per the fundamental what we understood, I think we should. This is not a right price to invest into the gold. For trading, there is a different matter. So as a trader, you can look for $5,100 as a resistance. If $5,100 crossover, then we can again expect a sharp rally towards $5,200, $5,300, which is likely to be a very dicey or a risky rally. So for trader also, I would suggest if you want to buy, wait for some time, at least $5,000, $4,900 would be the great price. Keep a positional stop loss of 4,800. Once the 4,800 broken down, then we can expect sharp correction also. Because as again I am saying, gold doesn't have any fundamental use or a demand. It is a general natural hedge. And before investing into the gold, if you look for the fundamental, look for the bond yields. The moment Japanese bond yields is now above 1% after 20 years, it is again a risk. It is again a warning sign for gold investor. So be alert on gold. Again, this is not a right price to invest in gold.
Right. Kiranji, thank you so much for your time. We, of course, value your suggestions very well, and we'll keep an eye out on Coal India, Bajaj Auto, and, of course, your wonderful thought process on silver as well as gold. Thank you so much for your time. We'll pause it here, ladies and gentlemen. So the first half an hour of trade has put bulls again on the front foot. Nifty is in the green after a mild dip towards the red in early morning trade, but recovery there. Strength coming in from net foreign investment coming in after a long time. The FII buy number was 5,624 crores on a net basis. Even DIIs purchased to the extent of about 335 crores. Now, strength is there in the Nifty metals index. The energy and the oil and gas index are in top shape, 1.8% higher, 2% higher respectively. CPSE, which is the Central Public Sector Enterprises Index, doing pretty well. Therefore, keep an eye out on all the energy spaces. Oil India, ONGC, NTPC. These are looking good, ladies and gentlemen. And with that, we'll pause it for a moment, but stay tuned with Business Way Television. A lot that's happening.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.